Argentina is falling apart. The IMF handed Argentina the biggest bailout in IMF history at $50 billion. That wasn't enough apparently because they have already expanded the program, adding more billions. When will it stop? They haven't corrected the problem, and so the issues will persist. The assets of the country will be sold off, and the sovereignty will be lost. But nobody really cares. You came here for the truth, so let me unveil that for you. Today we're going to have our focus on Argentina. I want to look at Europe as well. Stay tuned for a very jam-packed episode. I've got some information to share with you that I think is so crucial to understand, not just if you live in Argentina, but elsewhere around the world. Let's take a look at this article right here. The IMF agreed on Wednesday to increase a lending package with Argentina by $7 billion. That will total $57 billion. That would be by far the largest bailout in IMF history, seeking to calm the markets over the country's ability to meet its debt and growing economic turmoil. What we have here is a problem that has been money leaving. It's been fleeing. They've been increasing the interest rates dramatically. I think I just read, if I'm not mistaken, that they are now at 65% interest rates. Money is still leaving. They are watching their reserves dwindle down. The IMF is saying, hold on a second, we're going to make some rules. And that's what I'll talk about here in just a moment. The Central Bank of Argentina has decided to adopt a floating exchange rate regime without intervention. That's Christine Lagarde. Now I'm going to show you something here from this Reuters article. IMF boosts Argentina program to $57 billion in a bid to halt the peso's slide. It continues to fall. I'll show you a chart in a second here, but we have a problem where now the IMF is in control and they are going to decide what happens when. All right? They increased their 3-year lending program with Argentina by $7 billion. That's important because they are suggesting it's going to be for only 3 years. That's all, and we're not going to have any more. Well, they've already increased just practically weeks later. They've increased by $7 billion. I want to know what's going to happen here in the coming months and years. As conditions get worse globally, we're going to have to see some issues arise in Argentina. Now, looking at this here, Argentina has been at the center of emerging market turmoil this year after a drought plunged Latin America's third largest economy into a recession. Investors fear that Argentina will not be able to service its foreign debt in 2019 amid the peso, one of the world's worst performing currencies. It's lost more than 50% in 2018. Imagine your money having been halved. If you have $10,000 in the bank, you now have $5,000. Or maybe you had $1,000 in the bank and now you have $500. That's going to hurt you a lot. No matter how much money you have, 50% is unfortunately a big amount. Now that means that individuals holding on to foreign currency, like the US dollar, for example, or US dollar denominated assets, that's going to be beneficial for them because they can come back and into their own country. But hey, if you're working a 9-to-5 job in Argentina and all of your assets and you own a house maybe, or you rent a house, you have a car, things like this, it's all priced in the peso, and that's going down in value and does affect. A lot of people don't realize it. Even some people within the country haven't realized it yet, but it will take effect. I've been showing you this now, but people who are a little bit more well off might feel it a little later. But I assure you, when the currency of the world, the reserve currency, is the US dollar, every commodity and everything is priced in US dollar. That affects you even if you're not doing trade with the US. It has a major impact. Lagarde said that Argentina's central bank had agreed as part of the deal to allow the peso to float freely and would only intervene in the foreign exchange market in extreme circumstances. I'm going to show you those extreme circumstances, and they will come in the near future. This is Argentina's currency versus the US dollar, and there's this no intervention zone. So they're allowing it to float between this point here of 34 and 44 to the US dollar. So it can go up and down, but we've seen it now decline beyond 40 to the US dollar. I've shown you this all the way through, seeing it go down and down and down. And this, as far as I'm concerned, shows us the weakness of the currency and what's happening there. The flight is obvious, it's present. You can see it right now in Argentina, and that is truly worrisome, not just for them, but other countries as well. So I'm going to pay attention to this. I will keep you updated on that. Now, this reminds me of Greece, and you saw what happened with the whole Troika. They're deciding everything, and the people of Greece could decide nothing. And we know that this is provably the way it had been because you saw the referendum that took place in Greece. They said, do you want a third bailout? Yes or no? We're going to let the people decide. They voted, they came out, and they said, well, you know what? Unfortunately, we're just going to do it anyway. Literally the next day after the vote, the people said, no, we don't want it. The very next day, they went ahead. Why? Because the Troika decided, not the people of Greece. The people of Argentina are not going to be able to decide the fate of their country. You now have the elite in control of the finances and that country. Unfortunately, that's just the way it is, all right? The IMF comes in, you watch out. It's a big problem. Nothing good ever comes out of it. Now we're looking at the target 2 balances here. I've shown you this before, but think about it as where the money is. And you could see there's pretty much only one country right now that seems to be doing very well, and that is Germany. You could see that continuously over the past several years. This is basically since the financial crisis, showing you the direction. Everything else is pretty much flatlined or down. This one right here that is slightly up is Luxembourg. That's where a lot of them, of the shell corporations exist and things like this. And a lot of these countries, whether we're looking at Italy in this case, whether we're looking at Spain, they're not doing well. The money is fleeing. They have a big problem with debt on so many levels, and this is only going to be exacerbated into the future as we see the quantitative tightening policies that the central banks, not just the ECB, but all of them are putting in place. This is the real GDP per capita, whether we look at this from, this is going back to the start of the EU, going back 1999, in fact. But look at the, what has happened over the past few years. I'm just showing you this as a prop, really. But what I noticed is that the problems are never, ever resolved, okay? You can look at that in Europe. You can look at it in Argentina or anywhere else. I never see an actual problem be resolved. They restructure debt, and that is simply to take the garbage, repackage it up, and they use it as an investment. I think that this only exacerbates the problem. It only makes the problem worse. They expand the debt because the debt is a business, just like a mortgage. People are always asking, why are these housing prices a problem if they go up? The problem that I see with housing is that they continue to rise. And why? Why would an individual, they're sitting on their home, they have to be in the market at all the times? You have that home, let's say for 30 years, maybe you move into a different home. You're just sitting on it. Why would you want that? Unless you were a company like a bank that makes a product out of it, and that is a mortgage. That's the reason why. We want this to continue because there are investment companies, whether it's your bank, who then takes that and sells your mortgage off to another company. Remember that. And then they sell that off, and they hope and pray that you don't pay it off for the whole time. They want you to drag that thing out as long as possible, pull as much equity out as possible, and you are simply financing their schemes by doing so. Sovereign debt as a percentage of the GDP has increased quite a bit since the financial crisis, as you can see right here. Look at all these different countries, everything from Italy to Spain and so on. I worry about all of this because these countries can't pay back. And with the CSPP program, the asset purchase program that the ECB has been engaging in, and even, for example, the Bank of Italy is buying up its own garbage debt, they can't make it happen. They are struggling to deal with all of this right now, and it's only going to get worse. That's my message for today. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support the channel, so I do appreciate that very much. And if you want the financial education you were not taught in school, these 2 books have it all. You're going to get the A to Z, everything you need from the foundation, the asset classes, how to make money from this, you're reducing your expenses, and so much more in these 2 books. Basically, the Money GPS has a lot of that foundational type principles. I covered similar topics in Global Economic Collapse, and it sort of fills in the gaps for the things I didn't or couldn't talk about in the Money GPS. So definitely check those out at the link in the description of the video. If you're more interested in the audiobook version, you can get that at themoneygps.com. If you're still here, just want to mention the fact that I found this new recording program that I can now remove the top portion of this so it looks a little bit more clean, a little bit more professional. If it might put like black bars at the top and the bottom, but I think it's good because it looks a little bit more professional. If you appreciate that or even notice that, just let me know. Take care.